Hello there, traders. Welcome to the Markets in Three with me, John, Senior Market Analyst here at Anzo Capital. Let me put a bit more light on here. But I'm here to show you the latest updates in FX markets. I'm here to prep the week ahead as well. We're going to be taking a look at the strong versus weak currencies as well to find out what the best Forex pairs to trade this week are. But before we dive into any of that, there's been some news. There's been some data overnight. Well, say data overnight. It was into the close on Friday, which has kind of seen dollar CAD jump higher. So there was a trade tariff war going on between Canada and the US. Friday afternoon, there was a strong potential that we were getting a deal. We saw a lot of downside in US dollar CAD prices over the coming days. There was positive reporting of this deal being done. Going into Friday's close, deal not done. And 50% tariffs have been imposed on Canada. Canada's PM, Mark Carney, stating that he's going to go back and put exact tariffs dollar for dollar onto the US. Dollar CAD prices gapped on the open from 137, one spot 37.60 up to the highs of 138.15 before coming back, and is now accelerating towards the 1 spot 38.50 resistance level here and the 4-hour 50 moving average. If we look at the daily chart, dollar CAD prices have been pretty bearish. This is something that we've been talking about since the start of July, looking for this bearish move to happen in US dollar CAD prices. But has this now changed the narrative? Canada, or the Canadian dollar at least, is starting to weaken on this data. If we look at across the board, Canada is down against the US dollar. It's down against the Australian dollar as well. It is also down against the Swiss franc and the Japanese yen. And we also have it down against euro, as well as pound and the New Zealand dollar. So across the board, this is seen as bearish for Canadian dollars. And the big reason behind that is because obviously Canada relies a lot on the US for its business, for its deals. So is this in the best interest for Canada? That is going to be something we're going to discuss today. Let's go take a look at some of the notes from it. From the this is from News Squawk. They've done a whole section here on the tariffs and the trade war. So let's go through it. It says that trade discussions between the US and Canada collapsed on Friday, partly due to a last-minute standoff regarding cutting US tariffs on Canadian medium and heavy-duty vehicles. According to people familiar with the matter, cited by Bloomberg, this means the 50% US tariffs on some Canadian goods have taken effect, while Canadian PM Carney vowed to retaliate by matching tariffs dollar for dollar on US goods from September 8th. US President Trump posted, "Canada wants the benefits of being a state without being one. They have also charged our great farmers for many years massive amounts of tariffs, no more." So Trump is basically saying that they have been tariffing them for years with no retaliation, and the US deserve more. So he's retaliating with these tariffs, which obviously Canada is not a fan of. US Transportation Secretary Duffy said Canadian PM Carney is going to come to the table on trade because tariffs will be devastating, while he suggested Canada is foolish to think it could win a trade war with the US President Donald Trump. Canadian PM Carney has commented, saying that Canada is in a trade war with the US and that President Trump miscalculated by escalating his tariff attack. Canada sees a long trade war. Okay, so this isn't going to be a quick job and done. And if it is, that's going to be obviously dollar CAD downside. But in the meantime, CAD could be coming into some further weakness now. Canada sees a long trade war with the US that could last beyond the midterms. So some big developments when it comes to the US trade tariffs. And we can see in dollar CAD pricing that we're seeing that gap up. Obviously, CAD being a weaker currency at the moment could play into the hands of what we talk about today, which is going to be that, what is going on with the Forex strength and weakness this week. So let's go dive into that a little bit. Okay. So I want to talk about this because, with regards to Forex strength and weakness, this is something that I look at every week. Okay. So I have my own currency strength meter here that we look at, and I'll just put it on dark mode so you can see it. And what I'm looking at is I'm always looking for what currencies are strong, what currencies are weak, because essentially that's what makes trend in markets. You have one currency that is weak, one currency that is strong. Now, one currency that has been super weak and that we've been trying to short for a while is the US dollar, right? We looked at the macro behind it, the big macro drivers, and they were, GDP lower, inflation lower, employment or NFP lower. So everything that was coming out was coming in a little bit lower than expectations. So what does that mean? It means that the dollar data isn't coming in line with forecasts and is not coming in as good as expected. So dollar started to weaken off the back of that. Another good reason for that was the pricing of the Federal Reserve interest rates. We saw that we went from the 16th of September meeting, went from a 75% chance of an interest rate hike. Now it's down to 63% chance of no hike. So we're seeing a big mispricing. Now, the only thing that's kind of throwing this all off at the moment is bond yields. Bond yields is the big story because we can see that bond yields are continuing to drive higher. The US 10-year closed on Friday at 4.73%, which where it opened, it's been kind of whipsawing between that and 4.65% for a while now. And the reason we had this kind of whipsawing effect was because US Treasury Secretary Scott Bessent got involved, started buying bonds to try and drive these long end yields down, kind of like a mini intervention. And it failed. The market failed. The market called his bluff. He then sold more. He wanted to buy more. Bought more bonds. Didn't work. Bond yields continued to climb. So either they've got to get a bit more aggressive here to a point where it's unprecedented, or we've got to see some data that really pushes the mark lower. And we do have obviously US core PCE coming up, and I will be doing a preview of that in a video this week. So keep your eye on that because it's going to be a big one. Now, a lot of the big drivers around this move is obviously the US and Iran war, right? So, when we talk about the US dollar being weaker, there are a couple of risks to it. One of those is obviously those yields being higher. The second is oil prices were climbing because the tension and escalation between the US and Iran is climbing. The reason we're seeing oil prices now higher is because there is now an economic battle going on. So the US are trying to starve Iran of economically, right? So if we go take a look back at News Squawk, we can have a little look at what's going on in terms of that, but because there's been some data along that as well. So if we go take a look at the opening news here, it says that Iran, so basically US Treasury Secretary Bessent wrote in the FT that the economic D-Day is coming for Iran, and countries that calculate appeasement of the regime to be a safer choice should reconsider. Iran has warned if the economic war continues, not a single drop of oil will be exported, neither through the Strait of Hormuz nor from anywhere in the Persian Gulf. So very aggressive messaging coming in here from Iran. How will that impact things? Well, obviously, we're talking about oil prices here right now. So if we do see Iran implement that no oil leaves the strait, right, that's only going to escalate things between the US. What does that mean? We're probably going to see continuation of this oil price unless some de-escalation comes. And at the moment, it doesn't look that way. Now, What's interesting though, on the open, we've gapped lower. We have gapped lower on oil prices, which is very, very interesting. The market has drove down on the open, opened at 93 spot 50, come down to 90 spot 86. So we have seen some downside in this, but escalations in oil for me only mean upside, and we could see the gap that opened back here in July close, and that means oil prices could be trading near that $100 a barrel again. That is going to be the only real risk to US dollar strength, in my opinion, because the data out the US is bad. The inflation is falling, X, Y, and Z. If oil prices rise, that means inflation could become sticky, and that's going to be what drives those yields, and is what's driving these US bond yields to remain slightly higher. And because of that, we're starting to see a little bit of a pullback in some dollar pricing. So if we go take a look at the US dollar index at the moment, we're starting to see the dollar index pull back. Wednesday, the 19th of August, this is where Scott Bessent announced bond buybacks by the US government, double of what they're used to. US dollar fell on that news. We saw a huge drop, but now we're starting to recover that US dollar move, right? We can see that we had a couple of days of pause. Now we're starting to recover that. Now, markets don't move in straight lines, right? We know that. Markets can, drop, consolidate, drop. And I do feel like US dollar's least path of resistance is lower towards sort of $98 on the dollar index. But at the moment, the catalysts are pushing prices of the US dollar up. Now, later in the week, we do have US core PCE. So that might be the driver that kicks US dollar lower if that does come in below those forecasts. But again, I'll cover that in a US core PCE preview going on next week. But in that sense, what does that mean? Well, if we go to take a look at things like euro dollar, right? Euro dollar trading up at 117 at the minute. Now, if we go to the currency strength meter, right, we want to have a look at the strong versus weak currencies. Euro is one of the top currencies at the moment. Euro is at +3, US dollar is at -7. So on my trade signal chart here, we can see Euro US dollar is highlighted here, okay, as a pair to watch. It's a pair to watch to go long, okay? So if that's the case and I want to be bullish on that market, that's fine. But I need to watch for pullbacks. I need to see where a good level of support is going to be. Now, the 116 handle could be that level, right? We can see that prices obviously rejected here numerous times in the past. We've also got this kind of consolidative period between the 115 handle, which formed on the 30th of July, to that breakout down the 19th of August. So what we could do is put a market profile on from the low, which is on the 28th of July, right, to the swing high, which formed on the 20th of August. And what this does, it maps out some areas of volume, right? So we can see that we have kind of volume starting to kick in around that 116 handle. So for me, the game plan is watch for price to pull back towards that 116, look for lower time frame changes in trend, look for a potential continuation to the upside. Now, one thing we can do is watch the 4-hour time frame, right? Because in a daily pullback, you'll see the 4-hour making lower lows and lower highs, well, should do anyway. So if the market changes that and we start to see higher highs, higher lows on the 4-hour chart, then I'm going to be looking for continuations of this euro US dollar upside, right? But like I said, we have to kind of take, both sides of this. Another one that we were looking at obviously was New Zealand US dollar, because if we go back to the currency strength meter here, the New Zealand dollar is the strongest currency. Okay, +7, dollar at -7. So that means naturally Kiwi US dollar is in a upward trend. Again, if I go down to the trade signal table, we can see that the New Zealand US dollar is ranked here as the one to watch with New Zealand US dollar long. Now, we do have to be careful though. And the reason why I say this is if I highlight New Zealand US dollar on the historical strength chart here, you'll notice that I banned this from +7 to -7 on the board, right? On this chart. And you'll see that at +5 and at -5, there is a very faint dotted line that goes across the bottom, right? You see it just down through here. Okay, and up through there, +5. And the reason being, above this band of +5, it means that the currency is very strong and it could be vulnerable to reversal. Again, if it's below -5, it means that it's very weak and it could be vulnerable to reversal. So let's take an example of this, right? So I'm looking at New Zealand US dollar here, but just have a little look at the 6-month timeline. So if we go take a look at the 4th of July, for instance, right, 2026 of New Zealand US dollar, right? Let's go back here. Okay, in and around this area here. This is a really good example of this. 4th of July is there. So it'll be the kind of like the opening of that weekend, right? We had on our currency strength meter, New Zealand US dollar short. Okay, and I'll show you this here, which is this area, right? But if you noticed, look, US dollar is at +7, showing that it's one of the strongest currencies. New Zealand dollar has just gone from -5 to -4. So it's showing that it's kind of uplifting its strength a little bit. Okay. So this to me is a classic one pattern. That's why it's highlighted in the strength signal table here, is that yes, the trend is down, but there could be a slight chance of reversal. And look what happened to price. Price fully reversed. We had a market that went from being lower lows, lower highs to higher highs, higher lows. And ever since, the market has been bullish. Okay. So we have to be considerate of what's going on here. Okay. We're at a level of resistance, right? The market is obviously very bearish US dollars, and it has every right to be because of the macro data. But we still have to be, sensible in where we get involved with the market. So looking at New Zealand US dollar, it's the top currency pair to trade, but it also could be a good reversal signal. Looking at the currency, looking at the conditions of this market, we're making higher highs, okay? Each high is getting higher. We're making higher lows, okay? So we're not in reversal territory. All we're in at the moment is a potential pullback phase, right? So remember, phases that go with the trend are called phase 1. Phases that go against the trend are called P2. Okay. So if the daily chart starts showing me a phase 2, which means a pullback, I'm going to be looking for price to come back to an area of support. Okay. Now, if I look at, again, this and we draw a market profile from the last swing low to the current swing high, we can see that all the volume starts to kick in around about the 0.59 handle. Okay. So that handle right there to me is my support. If price comes down to this level and starts to reject, starts to show me those lower time frame changes of trend, then I'm going to be very interested in being a buyer at those points. Okay. I don't necessarily want to be a buyer now because there's no risk reward anywhere. Okay. If I look at, let's go back to this daily chart. Let's say the momentum is to the upside. I'm going to buy right now. My stop loss, where's it to be safe, has to go at 0.5811 at least minimum. The next target level is up at 0.6075. That's a negative reward to risk ratio. If I drag my entry from current price down to that 0.59, I've made a 2-to-1 for myself. So it makes sense for you to wait for the pullback, wait for the market to pull back first in order to look for the continuation. So that's what I'm doing here on the New Zealand US dollar price, which is the top of our currency strength meter. New Zealand being +7, dollar being -7. You can see on the trade signal table as well, I have a trend signal and a reversal watch, right? So it's just every time you see these, it's just, be careful of the reversal watch, okay? Now, another market to have a little look at is obviously things like Euro Yen, Aussie Yen, Kiwi Yen, CAD Yen for long opportunities. Yen is the second weakest currency at the moment, okay? Which is pretty surprising to me considering the macro around that market. But New Zealand yen, euro yen, top of those charts, Aussie yen as well. So let's go take a look at a couple of those pairs. So let's have a little look at Aussie yen first. It's on my list here. We can see that Aussie yen is breaking higher. It's just recently taken out previous swing highs at 113.50 and is continuing up to the next resistance level at 114.75. So this to me is looking pretty good. We're in a phase one on the daily chart, which means I can apply my strategy. So going down to the hourly chart here, I can look for some opportunities. So what does that mean? Well, when I look at my hourly chart and I plot my 50, 200 moving average and I have my stochastic oscillator open, it means that I can start looking for price to pull back and for continuation moves. So if price pulls back to the 113.50 handle, pulls back to the 1 hour 50 moving average, and then rejects it, closes above it, I can start looking for long opportunities on Aussie yen. So Aussie yen looking pretty good. Let's go take a look at CAD yen. CAD yen probably not so much, right, because of the tariff situation, but could lead to an opportunity because price is pulling back. But be a bit wary of that one. Euro yen looking pretty good here as well. If I just have a little look at the chart, it actually gave us a trend signal at 185.60. So let's have a little look at this from a top-down analysis point of view. Let's look at the daily chart first. Daily chart shows a resistance level I've got pointed at 186.50, which looks like a bit of a range high area, but could be a target for upcoming price. So that could be our target level. When we go to the 4-hour chart, we're making higher highs, higher lows. If we look at the hourly chart here, we're obviously breaking out a little bit here, and the 30-minute chart also shows that. So this is looking pretty good. This is looking pretty good. Let's just map it out to see if we've got a good risk to reward. So if I was to buy above that candlestick high of the close, my stop loss below the 200 moving average, and my TP up at 186.50, we have a negative reward to risk. So I'd have to bring my stop loss in below the previous swing low in order to try and target up there. So if I was looking at this move here, maybe that could be it. Or we can go to a lower time frame, look for a pullback. Okay, so if we look at the 15-minute chart, there is a really nice consolidation, okay, that formed really nice ascending triangle pattern. That could be a nice retest zone to go long, right? So I could put my market profile on, have a look at an entry around about the POC at 185.60. Stop loss tucked in below the swing low there. That increases my reward to risk ratio by up to 1.8. So that's a nice potential opportunity there. So I'm going to set an alert around about that POC, see if price comes back to it, see if I can get a tighter entry on a lower time frame. Okay. So going back to the currency strength meter, and we'll just finish on this. This is the currency strength meter for this week. It shows that the New Zealand dollar is the strongest, followed by euro and the Australian dollar. The weakest currencies are the Swiss franc, Japanese yen, and the US dollar. But just be aware that US dollar is at -7, yen is at -5, so they are very weak, pointing to potential reversals. New Zealand dollar is at +7, so very, very strong, potentially pointing at reversal as well. So just be aware of that. So I'm going to leave it there, guys. Thank you for joining today. My name is John, Senior Market Analyst at Anzo Capital. Join me very, very shortly. I'll be doing a core PCE preview on the YouTube channel. So stick around for that. Speak to you soon.